Hey everyone, in today's video, I want to talk about the three stocks that I absolutely would not buy. Now, there's so many videos about stocks to buy, best undervalued stock. I'm super guilty of it, but I think what's just as important is actually to know what not to buy. Now, the second reason is because there's been a recent sell off and there could be some opportunities you're looking at. And when you're comparing the Canadian market compared to the American stock market, well, the Canadian market actually looks like there's quite a few attractive opportunities. But I just want to stress on these three Canadian stocks I absolutely would not buy. Most importantly, I want to share my process for looking at red flags, my super quick process for screening out stocks so that, well, it helps you become a better investor. Now, one of my goals with starting this channel is to help as many people as I can to help them grow multiple streams of income, build their wealth so they can ultimately design their best life. I'm a former engineer that is now a full-time investor managing a multi-million-dollar investment portfolio full-time. If you are looking to learn more about stock investing, real estate investing to create multiple streams of income, build your wealth, and ultimately design your best life, then you must hit that subscribe button and that bell notification button to get the latest and greatest videos coming to you every single week. Now let's get with the video. Now, before I jump into about the three stocks that I absolutely would not buy, I want to share a story that actually was instrumental in starting my investing journey. So let's wind back many moons ago. I was in grade 12. I was stressing out about an assignment my economics teacher had given the class. We were all given $100,000 to invest in the stock market, but I had zero clue on how to invest in stocks, like zilch. It was really, really stressing me out. Now, this book caught my eye because it says, grasp the basics of penny stocks, and it's for dummies. And it says, find undiscovered penny stocks. Penny stocks, I've never heard of it, but pennies sound good. It's cheap. Lazy me, I jumped straight to strategy and, ooh, a table caught my eye. I was thinking, holy crap, this is it. This is how I'm going to do it. I was so relieved to find a way. And being a typical Asian bargain hunter, it resonated with me because, they are penny stock. I wrote my strategy down and then picked my penny stocks and bought a ton of shares. And well, it's buy low, sell high. And watch the money rain in. How hard could it be? Now, my expectation is to obviously gain $173,000. But in reality, 3 months later, all my penny stocks tanked. My account blew up badly. Now, some of these lessons that I took away from high school and observing these group of guys do a great job winning that competition are lessons that I want to carry out with these three Canadian stocks that I absolutely would not buy. Now, what I'm about to reveal, well, may be surprising or maybe not surprising. And that's okay. It's okay if you don't agree with me because this video is only for entertainment purposes only. Please do not take this video as financial advice. Now, the first stock I would absolutely not buy is Shopify. Now, I know Shopify has dropped dramatically in the last few months and it kind of looks enticing, but if you peel the curtain back, you'll notice that a lot of the revenue and earnings growth and the cash flow is built in the future. In fact, we have no clear roadmap of the upcoming years. So I feel like the net income and the profitability will take years to really play out. And when you're in an uncertain environment with rising interest rates, with inflation risks carrying on for a lot longer than we expected, and it's just filled with so much uncertainty that you should, well, I know personally, I would love to invest in companies that make cash flow today, that are profitable, that have revenues that I could see coming in quarter after quarter for the next couple years rather than, well, hoping for the future. Now, of course, Shopify can change on a dime just like that because they might get a very clear roadmap and because their employees are always working from home, they've been building a big war chest and boosting their net income and boosting their cash flow. Well, that could always happen. But for now, for me, I'm totally staying away from the stock. For me, it's considered a super high growth stock, of course, with a lot of upside, but still a lot of downside. And the risk versus reward is just not there. So right now there's a rotation to more safer value stocks. And well, Shopify isn't that. Now, here are the three key red flags I'm seeing. First is valuation. Can't wrap my head around the true value of Shopify, which, if I calculate it out, still looks like Shopify is overly expensive. Number two, earnings is slowing down. A quick hack for you. If you go to Yahoo Finance, you just check the forward PE ratio. It's actually increasing, which is saying that the earnings is expected to decrease in the next upcoming year. Now, if you look at the analyst estimates, they're also not looking so good. So this is another red flag. The next red flag is that there's a ton of sell-off, insider selling. Like if people in the company are selling their stock, ugh, that's always a red flag for me. And the last thing, well, executives are also leaving, which these are like not just one executive, but several executives have left in the last year, which is also another red flag. Now, the second company is Hive, which is a penny stock, which is essentially a company that mines Bitcoin. Now, this company I know seems really enticing, especially if you're bullish on Bitcoin and Ethereum in the future, but even if you're bullish in the cryptocurrency world, this is just something like, this is a company that I absolutely would not buy. First one is future earnings are not looking bright. In fact, another quick hack, look at future PE in Yahoo Finance. It's much higher than the PE TTM, which is the trailing last 12 months, which means I expect that 2022 earnings are also going down. And the analysts are also forecasting that the earnings are expected to decline by an average of 34% per year for the next 3 years. Second one, well, there's been significant share dilution year after year after year. And this makes sense because they have to raise capital to build more infrastructure to mine Bitcoin, which is a very capital intensive operation. Third one is, well, there's also more shares sold than bought, which to me is not a good sign. Now, the third company that I absolutely would not buy is Lightspeed. Now, I know this is a beloved Canadian company, well, was actually pretty pumped up in the last year, and I know it's dropped dramatically in the last few months, but I can't wrap my head around this company. Here are the red flags that I'm seeing. First one is the CEO has stepped down, which is like a big no-no, okay? If CEO does not want to stay, why do investors want to stay invested in the company? Now, the second one is, well, there's financial discrepancies, which is like a big no-no. If I can't trust the financials, and it's been proven that there is financial discrepancies in the past few years, that's like a big no-no. Like, how are you supposed to evaluate the performance of the company if you can't trust the financials? Number three, its losses are getting bigger and bigger over time, despite revenue increasing over time. Now, I get it. When you're a new company, you need to reinvest your revenue back into your company's operations, and it's going to look unprofitable for the upcoming future, especially if you have a lot of staffing to ramp up, you have to pay for your office expenses, there's a lot of marketing expenses, etc., etc. But still, if a company is efficient with their expenses, managing it really, really tightly, when your revenue is like exploding, you should, well, start generating a really clear path to profitability. And right now, it's not there. Hey everyone, do you like building passive income, which is essentially making money while you're sleeping? Then you definitely want to check out my ultimate dividend growth guide, which is like for free, full of actionable advice, no fluff. Check out in the link below in the pinned comments. Also, I have an exciting announcement. I'm opening up enrollment to my Financial Freedom Accelerate course using stocks. If you're looking to build multiple streams of income, build wealth, and take financial control of your life, and then you definitely want to check out my link in the pinned comments below. I'm opening up enrollment and you'll be the first to hear and get early bird pricing. I'm going to talk about Canadian stocks, how to build your portfolio, how to position size, how to build your portfolio to survive and thrive in any market circumstances, whether it's a bear market, bull market, or sideways market. Also talk about even options, introduction to options, which is another source of income that you can build when you're ready. I'm also personally mentoring a small group of investors. So if you want to build multiple streams of income, build massive wealth, and of course, ultimately design your best life, then you definitely want to check out my Financial Freedom Accelerate course. Sign up. It's free. Be on the waiting list so you get early bird pricing. I'm opening up enrollment soon. Anyways, I hope you found this video super helpful. All I ask of you is give me a thumbs up. I'll see you in the next video.